If you hold XRP or XLM, stop scrolling. Seriously. What I'm about to tell you isn't about the daily price swings or the usual crypto hype. This is about a fundamental shift happening in the very plumbing of global finance, a shift that will directly impact the future and the value of your XRP and XLM holdings. For months, maybe even years, you've believed in the potential. But are you truly aware of the crucial deadlines, the silent institutional battles, and the hidden adoption metrics that will determine whether you ride a wave of unprecedented growth or get left behind in the dust? This isn't fear-mongering, it's about empowering you with the knowledge you desperately need right now. Because if you're holding XRP or XLM and you're not tracking these specific game-changing developments, you're essentially flying blind into a financial storm. The clock is ticking, and what happens by November 22, 2025, could be the single most important event in the history of these assets. Are you ready for the truth? Because if you hold XRP or XLM, this is crucial to know, and I'm going to reveal it all, starting right now. You've heard the promises about XRP and XLM for years. But now, the real-world pieces are falling into place. This video is your strategic briefing, your insider's guide to navigating the institutional revolution that's quietly reshaping the demand for these assets. We're going far beyond the surface-level news and diving deep into 1. The ISO 20022 deadline, the looming November 2025 cutoff that every major bank is racing to meet, and why it's a make-or-break moment for XRP and XLM adoption. 2. The stablecoin liquidity wars, how the battle for stablecoin dominance directly impacts the utility and network effects of both XRP and XLM. 3. Ripple's billion-dollar institutional pivot, uncovering the hidden implications of Ripple's acquisitions and how they're building a new demand stack for XRP beyond retail speculation. 4. Stellar's real-world traction explosion, the often overlooked partnerships and adoption metrics proving XLM's increasing utility in global remittances and tokenized assets. And 5. The positioning playbook, how to strategically think about your XRP and XLM holdings in this evolving landscape, and the crucial signals to watch for. This isn't just another crypto update, it's a strategic advantage. By the end of this video, you'll understand the critical shifts happening behind the scenes and how to position yourself to potentially capitalize on the massive institutional flows that are just beginning. Because if you hold XRP or XLM, this is crucial to know, and your future financial decisions depend on it. Let's start with the ticking clock, November 22, 2025. This seemingly arbitrary date is actually a crucial deadline that Wall Street, major banks, and global financial institutions are laser-focused on. It marks the scheduled end of the Swift CBPR plus coexistence window. Now, what does that mouthful of acronyms actually mean for you, the holder of XRP or XLM? In simple terms, it's the deadline for the world's cross-border interbank messaging system to fully migrate off outdated formats and standardize on ISO 20022 structured data. Think of it like upgrading from dial-up internet to fiber optics for global money transfers. But why is this seemingly technical upgrade so incredibly critical for the future of XRP and XLM? How does this shift in data standards directly pave the way for massive institutional adoption and potentially send the prices of these assets soaring? And what happens to those who aren't prepared for this monumental transition? The answer lies in understanding how this structured data unlocks a whole new world of possibilities for programmable money and compliant settlement layers. But here's where things get interesting. Imagine sending money overseas. Right now, it often involves multiple banks, hefty fees, delays, and a lot of room for errors, like trying to communicate with someone who speaks a different language at every step. ISO 20022 is like a universal language for money. It structures payment data in a machine-readable format, making it richer, more compliant, and far more efficient. This is crucial for banks because it allows them to safely plug into modern settlement layers, including blockchain rails, without tripping compliance wires. For XRP and XLM holders, this is game-changing. These networks were designed for efficient, low-cost cross-border payments. ISO 20022 provides the standardized data that allows banks to seamlessly integrate with their rails. XRP, with its focus on bridging different fiat currencies, and XLM, with its emphasis on connecting fiat endpoints and facilitating remittances, are perfectly positioned to capitalize on this shift. Once banks can easily send ISO 20022 compliant payment instructions, the inherent speed and cost-effectiveness of XRP and XLM become incredibly attractive. This isn't just about faster payments. It's about unlocking massive institutional volume and creating real, sustainable demand. But the story doesn't end with data standards. Another silent battle is brewing that will further shape the future of these assets. While the ISO 20022 upgrade sets the stage, another crucial factor will determine the winners and losers in the digital asset space: the war for stablecoin dominance. Stablecoins, digital currencies pegged to fiat currencies like the US dollar, are becoming the lifeblood of DeFi and a critical on-ramp for institutional money. Multiple stablecoins are vying for market share, each with its own strengths and weaknesses. But why should you, as an XRP or XLM holder, care about this stablecoin battle? How does the success or failure of specific stablecoins directly impact the utility and demand for these two networks? Which stablecoins are choosing to build on XRP and XLM, and what does that tell us about their long-term potential? The answers will reveal a crucial insight into the future growth drivers for your holdings. Because the stablecoins that plug into XRP and XLM could be the key to unlocking their true potential. Think of stablecoins as the Trojan horses for institutional adoption. Once these regulated digital dollars start flowing onto a network, they bring with them a wave of liquidity and use cases. We're already seeing this play out on Stellar, where USDC has been hitting new highs in terms of circulating supply and transaction volume. This activity directly burns XLM for the base transaction fees, creating deflationary pressure and increasing demand. MoneyGram, a major player in global remittances, is leveraging Stellar and USDC to provide faster and cheaper cash on off-ramps in over 170 countries, real-world utility driving XLM adoption. And on the XRP ledger, we're seeing the emergence of new institutionally focused stablecoins like Rust. Backed by USD and built with regulatory compliance in mind, Rust is designed for enterprise use and is even being modeled as collateral within prime brokerage environments. This directly connects XRP to high-velocity institutional trading flows. The more these stablecoins are used for settlement, trading, and collateralization, the more demand is created for the underlying network tokens, XRP and XLM. These stablecoin integrations are not just a side project. They are a core part of the adoption strategy for both networks. But the institutional interest goes far beyond just stablecoins. While Stellar focuses on real-world remittances and stablecoin transport, Ripple has been making a series of strategic moves aimed squarely at capturing institutional liquidity. The most significant of these is their recent agreement to acquire Hidden Road, a prime broker that clears trillions of dollars in annual multi-asset flow for institutional clients. Now, why would Ripple, the company behind XRP, spend over $1 billion to acquire a prime brokerage? What is the hidden strategy behind this massive acquisition? How does owning a prime brokerage directly benefit XRP and create a new powerful demand stack beyond just cross-border payments? And what does the integration of their stablecoin Rust within the Hidden Road environment mean for the future price action of XRP? This isn't just about buying a company, it's about fundamentally reshaping the institutional landscape for digital assets, with XRP positioned right at the center. Ripple's acquisition of Hidden Road is a game-changer because it allows them to directly plug into existing institutional market structure. Prime brokers act as intermediaries, providing leverage and clearing services to large institutional traders. By owning Hidden Road, Ripple can now offer a seamless environment where institutions can trade digital assets, use Rust as collateral, and potentially leverage XRP for efficient FX conversions. This creates a powerful, self-reinforcing demand loop. Think of it this way: instead of just selling software to banks, Ripple is now building the infrastructure that institutions need to move large amounts of capital in the digital asset space. Rust, as a compliant stablecoin issued natively on the XRP ledger and Ethereum, becomes a key asset within this ecosystem, and XRP acts as the bridge currency for FX pairs where banks might not be able to directly hold digital assets. This isn't reliant on individual bank partnerships, it's about building a comprehensive institutional platform. The regulatory clarity around XRP, while still evolving, has also made institutions more comfortable exploring its use. This institutional pivot, driven by acquisitions like Hidden Road, is creating a fundamentally stronger and more sustainable demand stack for XRP. But while Ripple focuses on the institutional giants, Stellar is quietly building a grassroots revolution. While Ripple's moves often dominate the headlines, Stellar has been quietly and consistently building real-world utility, particularly in emerging markets. Instead of solely targeting large financial institutions, Stellar's focus has been on enabling faster, cheaper, and more accessible financial services for everyone. This includes powering remittances, facilitating NGO aid disbursements, and enabling tokenized payroll solutions. But beyond the feel-good stories, what are the concrete adoption metrics that truly demonstrate XLM's growing strength and long-term potential? How do we measure the real-world impact of partnerships like MoneyGram and the increasing issuance of stablecoins like USDC on the Stellar network? And what specific on-chain data should XLM holders be tracking to gauge the true health and growth trajectory of the ecosystem? The answer lies in looking beyond the price charts and focusing on the fundamental utility being built, one real-world use case at a time. The real story of Stellar's adoption lies in its tangible impact on people's lives. The partnership with MoneyGram is a prime example, providing cash-in and cash-out services powered by Stellar and USDC in a rapidly expanding number of countries. This isn't just a pilot program, it's a live, actively used network facilitating real-world remittances. We're also seeing a significant increase in the issuance and transaction volume of USDC on Stellar, indicating growing institutional and user confidence in the network for stablecoin transfers. This increasing activity creates a powerful network effect. More users attract more developers, more applications, and more partnerships, further driving utility and demand for XLM. The low transaction fees on Stellar make it ideal for microtransactions and high-volume use cases, particularly in emerging economies where traditional banking infrastructure can be expensive and inaccessible. While Ripple builds its institutional fortress, Stellar is building a global network of real-world users, a foundation that provides a different, but equally compelling, value proposition for XLM holders. But as we look at both XRP and XLM, a crucial question arises for every investor. Given the distinct approaches and target markets of XRP and XLM, and the broader shifts happening in the global financial system, how should you, as an investor, be thinking about positioning your holdings? Is it a case of one versus the other, or do they complement each other in a well-balanced portfolio? What are the key risk factors and potential rewards associated with each? As we approach the critical deadlines and witness the unfolding adoption metrics, what are the smart strategies for managing your XRP and XLM holdings? Should you be accumulating, taking profits, or diversifying? And what specific signals should you be watching for to inform your decisions? This isn't financial advice, but understanding how to think strategically about your portfolio in this evolving landscape is crucial for maximizing your potential returns and managing risk. Ultimately, if you hold XRP or XLM, this is crucial to know, these are not just speculative tokens. They are key pieces in the evolving puzzle of global payments and digital asset infrastructure. XRP, with its focus on institutional liquidity and its strategic pivot through acquisitions like Hidden Road, is positioning itself as a vital bridge for cross-border institutional flows. XLM, with its unwavering focus on real-world utility in remittances, stablecoin transport, and emerging markets, is building a powerful grassroots network effect. While their approaches differ, their goals are complementary: to make money move faster, cheaper, and more efficiently across the globe. The ISO 20022 upgrade provides the standardized data they need to integrate with traditional finance. Stablecoins act as the digital dollars fueling their networks. And the increasing real-world adoption, both at the institutional level for XRP and the user level for XLM, creates a strong foundation for future growth. The crucial thing to know is that the landscape is shifting rapidly. The deadlines are real. The institutional interest is growing. And the real-world utility is becoming undeniable. By staying informed, by understanding the key drivers and adoption metrics, you can navigate this evolving landscape with confidence. Don't get caught up in the daily noise. Focus on the fundamental shifts happening beneath the surface. The future of global payments is being built right now, and XRP and XLM are poised to play significant roles. You are now equipped with the crucial knowledge to understand the future potential of your XRP and XLM holdings. You know the key deadlines, the strategic moves, and the real-world adoption metrics that truly matter. You are no longer just holding, you are informed and empowered. If this breakdown has provided you with clarity and a strategic advantage, then smash that like button and subscribe to our channel for more in-depth analysis and crucial updates on the crypto market.